All right, so welcome everyone. मेरे साथ है of course Prasad sir from SBI Mutual Fund, and it's a session today because innovative opportunities funds is what we are going to discuss. Innovation is of course the ground of everything that's going to come in future. मैं just अभी एक post पढ़ रहा था wherein somebody had posted about कि how Nokia never did anything wrong and yet lost, and that's probably because they didn't catch up with the innovations of the world, and which is where opportunities like this kick in, and we'll try to learn from of course sir ki Prasad sir ki kya hai is fund mein and what is there to offer. Sir, the mic is all yours. We are here to learn.
All right. Thank you very much, Vishu, and thank you everyone for joining the call. So quickly to talk about the theme of the fund, right? So like Vishu has mentioned, so we are seeing innovation around us happening in every sector, and there are some companies which are innovating and creating a lot of value, and some companies which are failing to innovate, like example of Nokia, or you talk about Kodak. So these companies were not able to innovate, and because of that, they were died. So the idea is, as an equity investors, so we want to stick to those companies who are actually winning through innovation and gaining market share from companies who are not innovating. So that's the whole idea. So even if you look at some of the companies in the US, for example, let's say somebody like a Tesla or Netflix, so they came up with these innovative business models and then completely disrupted the status quo. And then they took the market share away from the other players which are not innovating. And then even for the consumers, so they created a lot of value in the process. And even if you look at the kind of value they created, the kind of stock returns, so that is phenomenal. So we believe that similar innovations happening in India also. And there are a lot of companies who are innovating and generating a lot of wealth for the investors. And so idea is to play that theme. And if you look at US last 10 years, there was a massive shift in the index also. So 10 years back, there was primarily banks, autos, manufacturing companies, energy company, oil companies in the index. Now almost 30% of the index is made up of these innovative companies. So we believe that even in India, something similar would happen, where after 10 years, you will see a lot of these innovative companies in the major indices. So that's the whole idea behind the fund. And we want to take along investors along with us. So we want to be positioned ahead of time for that trend. And quickly, so if you look at this slide, so this just shows an example of how the major events that happened in our life history, which actually transformed our lives. And every event is a landmark which actually changed our lives. And if you look at the pace of innovation, that itself is accelerating. For example, it took almost 100 years from the invention of printing press to radio. But in the last 50 years, we have seen personal computers, smartphones, now artificial intelligence, AR, VR. So a lot of things are happening with drones, blockchain, etc. So we believe that next 10 years is going to be very different in terms of overall innovation. And we believe that India is in the right place to benefit from the trend. This is another slide we're talking about how our data consumption has changed from KBs and MBs to now to saving terabytes. And another example of how our, let's say, music consumption has changed or a video consumption has changed, where we are streaming songs and videos seamlessly on our mobile devices. And another slide, this is what this slide shows is how with innovation, disruption is also happening. So if you look at the top 10 companies in the US S&P index, so they used to remain in top 10 for years together, like 85 years, they used to stay in the top 10. But now that leadership is changing very, very fast. For example, if you look at NVIDIA, they were not even in the top 10, top 25 years back. But now they were the top three in terms of the most valued companies in the world. And at a brief period, they were number one. So that is how fast businesses are dying, and at the same time, how fast value is getting created. So by focusing on these themes early, I think we can create a lot of wealth for shareholders. So in some of our portfolios, we already invested in companies like Microsoft when we saw cloud shift happening, or Nvidia when we saw that AI shift happening. So we believe that we can actually create wealth for investors by investing in these trends quite early. This is another interesting slide because innovation is not just sector specific, it is happening across sectors, whether it is automobiles with electric vehicles or hybrid cars, whether it is energy. with hydrogen, financial services with UPI. So any sector you take, whether it is pharma, industrial, so there is innovation happening. And there are some companies who are innovating and some companies who are not. So we believe that value will migrate from those companies to innovative companies. And that is how even the, I think, stock returns also will pan out into the future. So that is the broad thesis. And coming to India, we believe that India has all the right ingredients in place to actually benefit from this trend. So we have the favorable demographics, we have a very strong talent, we have basically the right government support. So we have the strong startup ecosystem. So we believe that India is at the place where US was 20 years back, where like in the from 80s to 2000. So there's a lot of innovation happened. A lot of these businesses evolved and created a lot of wealth. And we believe that next 20 years, India will repeat the same. And we believe that we are at that inflection point in terms of the innovation cycle starting. So coming to the fund. So primarily we talk about three buckets of innovators. So the first one is a product or a service innovator. So these are the companies who launch innovative products or services. So it can be a tech company launching a new internet platform, or it can be a traditional company like a pharma company launching their own innovative drugs instead of just drug development kind of a cycle. Or if it can be some industrials company who with their R&D launching an innovative product which is differentiated from competition. So it can be a mix of both new age companies as well as traditional companies who are innovating. Second is a process innovator. So these are companies, they need not have innovative product or service, but just by innovating on the process, they're able to differentiate. So for example, let's say sometime back when Domino's Pizza came up with this 30-minute delivery. So that is it's a very simplistic innovation, but it had created a lot of value for consumers. Because of that, they had an edge and their revenues actually grew significantly because of that simple innovation, which at the time actually played in that favor. So it can be as simple as that, or it can be, let's say, Bajaj Finance starting those instant loans, where if you're standing at the, like Vijay says, instantly you can take an EMI and then buy. So at that time, it was an innovation. And then later people copy, that's a separate thing. But that actually gave you an edge for some period of time. So it can be those kind of innovations. And finally, innovation adapters. So these are companies which are not the first movers. So for example, let's say electric vehicle, for example. So somebody, let's say Tesla has started the trend, but let's say a Tata Motors picked up the trend in India and then, so they adapt to the trend. So they are not the first ones, but they adapt to the trend and then they create value. So these are the third set of companies. So broadly, we'll be focusing on these set of companies who are innovating based on these three parameters. And these are some of the qualitative and quantitative factors we use to identify these companies. So we look at whether company is investing in enough in R&D, whether they are actually investing in the new emerging areas, whether they're actually gaining market share. So all these factors we look at to determine whether they are moving in the right direction or not. Coming to the portfolio construction, so it would be a bottom-up kind of a portfolio construction. So it would be multi-sector, market cap agnostic portfolio, because like I said, innovation is not just tech specific. It's not just happening in IT or a tech sector. It is happening in every sector. So it will be a multi-sector portfolio, market cap agnostic. It can be, these companies can be large cap, mid cap, small cap. It is happening everywhere. And at least 80% of the assets will be invested into these companies. So those 20% we kept more to take some tactical bets if they come in our way. But idea is to stick to the theme as much as possible. And second, we also have a lever to invest 35% of the funds outside India into foreign securities, because some of these trends are very early in India, like for example, artificial intelligence or hydrogen or blockchain. So there are no companies in India to play currently. So we want to benefit by investing into these companies outside. And if you look at some of our other portfolios, we already have invested in many of these companies through our own research. So we have the bandwidth to actually go all out whenever the RBI limits open. So currently, there is an RBI cap in terms of how much we can invest outside, and we already reached the limit. But based on our discussions with RBI and our internal thought, we believe that the RBI limit will open soon, which will actually allow us to invest outside India. And we can completely, I mean, go maximum up to 35% whenever the limit opens. And we also have Amundi as our partner, global partner, which also has this global research on these companies. So we have the bandwidth to invest into foreign companies on our own. So whenever that limit open, we can go up to as high as 35%. In terms of the portfolio construction, it would be a complete bottom-up kind of a stock selection approach, at least 35 to 40 stocks in the portfolio. And we'll be focusing on companies with strong competitive advantage, companies with a long runway for growth, companies with potential for generating strong cash flows. So although some of the new age companies might be in their initial journey, they might be losing money, but we look closely at the business model. We think about why they are losing money, whether they're making money at the unit level or they're losing money. So if it is only when we are certain that with scale they are able to generate profits, only then we'll invest. We don't invest just because they are growing fast, but we look at whether the business model itself is profitable in a steady state or not. Finally, we look at reasonable valuations. So it's not like a buy at any price kind of a strategy. So we look at pockets where there is enough growth to justify valuations, and inherently there's a lot of volatility in the sector. So we'll try to be tactical and then identify those entry points to get a reasonable entry valuations. So broadly, that is about the fund construction. And finally, in terms of the suitability, so it is more suitable for investors with a slightly longer time horizon and understand the theme, understand that they are actually playing these growth-oriented emerging sectors. So ideal for investors who focus more on long-term value construction, long-term capital appreciation with at least 3 to 5 years of time horizon, and are okay with short-term volatility. So broadly, that is the thoughts about the fund, and we can take any questions.
Right, sir. Sir, my first question is this looks like a very interesting opportunity. But whenever we talk about opportunities, we also should talk about risk a little bit. So, if you can expand a little bit on what are the risks associated with it is one, and number two, what is the ideal investor type who should be looking to invest in this fund?
Sure. So, like I said, so there are two sets of companies we'll invest in. One is the new age companies where the business models are emerging, fast growing, etc. Second is the traditional companies which are innovating. Suppose, let's say, it can be a Maruti or a Tata Motors launching electric vehicles, or it can be these pharma companies launching these specialty segments, or chemical companies. So, on the second bucket, these are all well-established companies, slightly lower risk. But in the new age companies, obviously they come with a risk. I mean, they come with a higher growth potential, but also equally higher risk and also higher volatility because something or the other disruption is keep happening. There can be a new entrant, or can be new technology change, or there can be a regulatory change, which makes them very volatile. So that way, I would say the overall portfolio will be slightly more volatile, slightly more higher risk, but it also comes with a higher return potential. So if we do our job correctly, ideally, I mean, so that is where we come into picture. So this is a theme which is not like just buy and hold. I mean, you can't just buy an index and then just sleep over it. This is a theme which has to be managed very actively, dynamically. So that is where an active fund manager and a research team comes into picture. So the bottom of stock picking becomes very important. For example, let's say in food delivery space, at some point there were like 15, 20 players. So if you had invested, maybe you're positive on the overall sector, but if you had invested in a wrong company, suppose if you invested in any of the other companies apart from Zomato, Swiggy, you would have lost money.
Yes, absolutely, sir. Since we're short of time, my I'll get to another last question of the day, which is one final concluding summary. If you could give us about this fund and or any general advice for our viewers out there, that would be awesome, sir.
Yeah. So to summarize, so think of it more from a thematic point of view. So our belief is that like how in the US in the last 20 years, the indices construction has moved from old age companies, old economy companies to the innovative companies, where now 30-35% of the index is made up of these innovative companies. we believe that a similar trend will happen in India, and we want to position ourselves ahead of that theme. So that is the main thought process. And second, in this theme, we believe has to be played managed very actively. And then we come we count on the inherent strength of our research team, and we will manage very actively and dynamically and want to create alpha. And third, so this would be we want to stick to the theme and want to create a portfolio with the true innovators rather than just justifying any company as an innovator. And finally, so we have the capability of investing in foreign securities. We have already done that in many of our portfolios. So whenever the RBI limits open, we'll be able to utilize the maximum of that up to 35% of the fund limits to invest into these foreign stocks to create that differentiated portfolio. So yeah, broadly, that is the thought process behind the fund. Yeah.
Awesome, awesome. That sounds really interesting, sir. Of course, I hope you'll allow us to have
Yeah.
more such sessions and learn more from you, sir.
Sure, definitely. Thank you so much, Vishu. Thank you.
Thank you so much
Yeah.
for your time.
Bye. Take care.
Please note that mutual fund investments are subject to market risks. Read all scheme-related documents carefully.